Imagine if you could invest in the internet in 1995 before Amazon became a trillion-dollar giant, before Google dominated search, before the world went digital. You'd be retired by now. Here's the reality: we're at that exact moment again, but this time it's artificial intelligence. By 2030, AI will add a 15.7 trillion to the global economy. That's larger than China's current GDP. The companies positioning themselves at the center of this transformation are about to experience explosive growth. Today, I'm revealing 7 stocks that could skyrocket in 2026 before the rest of the world catches on. Miss this, and you'll spend the next decade wishing you'd watched this video. Artificial intelligence has reached an inflection point where it's no longer experimental technology. It's becoming essential infrastructure for competitive businesses worldwide. This shift matters because we're witnessing the largest technological transformation since the internet revolution. Industry analysts project the global AI market to exceed 1.8 trillion by 2030, with 2026 marking a critical acceleration phase. Companies integrating AI are seeing productivity gains of 20–40% in specific operations, translating directly to bottom-line growth. This isn't gradual change, it's exponential. Businesses that delay AI adoption risk becoming obsolete, while those leading the charge are capturing disproportionate market share. Consider healthcare. AI is now reading medical scans with greater accuracy than human radiologists, predicting patient deterioration hours before traditional methods, and discovering drug compounds in months rather than years. Companies providing these AI solutions are seeing triple-digit revenue growth as hospitals worldwide race to implement these systems. The AI revolution isn't coming, it's here. Investors who recognize this transition from hype to genuine economic transformation today will be positioned to capture extraordinary returns as this reality becomes undeniable to the broader market tomorrow. Now let's talk about the first stock. NVIDIA has transformed from a gaming graphics card manufacturer into the critical infrastructure provider powering the entire artificial intelligence revolution. This positioning matters immensely because AI models require massive computational power that only specialized chips can deliver efficiently. Training a single large language model can cost tens of millions of dollars in computing resources, and NVIDIA's GPUs are specifically designed for these parallel processing tasks. Their dominance isn't accidental. It's the result of decades of engineering focused on accelerated computing. With an 80% market share in data center AI chips, NVIDIA essentially controls the bottleneck in AI development. Every tech giant, from Google to Meta to Tesla, depends on NVIDIA's hardware to build and deploy their AI systems. This creates incredible pricing power and recurring revenue as companies continuously upgrade to handle increasingly sophisticated AI models. When OpenAI trained GPT-4, they required thousands of NVIDIA's high-end GPUs running continuously for months. As companies worldwide rush to build similar capabilities, demand for NVIDIA chips has created year-long waiting lists, with some systems selling for premiums above list price. In the AI gold rush, NVIDIA isn't searching for gold. It's selling the shovels everyone needs to dig. The second and third stocks work together as a powerful duo. Microsoft and Amazon have leveraged their cloud computing dominance to become the primary delivery systems bringing AI capabilities directly to businesses worldwide. This positioning is critical because most companies lack the resources or expertise to build AI infrastructure from scratch. Cloud platforms solve this problem by offering AI as a service, plug-and-play solutions that enterprises can implement immediately. Microsoft's $13 billion investment in OpenAI gives Azure customers direct access to GPT models through simple API calls, while their Copilot integration embeds AI assistants into Word, Excel, and Teams for over 400 million Office users. Amazon Web Services holds approximately 32% of the global cloud market, meaning nearly 1/3 of all cloud-based AI applications run on their infrastructure. These platforms generate recurring subscription revenue that compounds as AI adoption deepens across their customer base. A retail company using AWS can now deploy AI-powered inventory prediction, customer service chatbots, and personalized marketing algorithms without hiring specialized AI engineers, simply by activating AWS AI services and paying monthly subscription fees. While others build AI technology, Microsoft and Amazon are building the highways that deliver it to every business on the planet. The fourth stock addresses a critical concern that keeps enterprise executives awake at night. Palantir bridges the gap between powerful AI models and the sensitive, complex data that enterprises and governments need to analyze without security risks. This capability addresses enterprises' data concern, data security. While public AI tools like ChatGPT offer impressive capabilities, Fortune 500 companies cannot simply upload proprietary financial data, customer information, or strategic plans to third-party servers. Palantir's AI platform allows organizations to run sophisticated AI analysis entirely within their secure environments. The company's two-decade history managing intelligence data for the CIA, FBI, and military establishes unparalleled credibility in secure data handling. Their recent achievement of consistent profitability demonstrates the business model is maturing beyond its government contracts. With commercial revenue accelerating and customer count expanding significantly, Palantir is transitioning from a niche defense contractor to a mainstream enterprise AI provider serving healthcare systems, manufacturers, and financial institutions. A pharmaceutical company can use Palantir's AIP to analyze confidential drug trial data, competitive intelligence, and regulatory documents with AI assistance, extracting insights and generating reports without any data leaving their secure network infrastructure. In an era where data is the new oil, Palantir provides the secure refinery that transforms raw information into actionable intelligence. Now here's a stock most people overlook, but it might be the smartest play of all. Taiwan Semiconductor Manufacturing Company operates as the indispensable foundation beneath the entire semiconductor industry, producing the actual chips that power AI innovation. TSMC's significance lies in its monopolistic position in advanced chip manufacturing. While companies like NVIDIA and AMD design chips, they don't manufacture them. TSMC does. The company controls over 60% of the global foundry market and an astounding 90% of the most advanced chip production. Building a competitive semiconductor fabrication facility requires investments exceeding $20 billion and a decade of expertise that few can replicate. This creates an incredibly high barrier to entry. TSMC's cutting-edge 3-nanometer and emerging 2-nanometer processes deliver the performance improvements that make next-generation AI possible. As AI models grow more complex and power-hungry, the demand for TSMC's most advanced manufacturing capabilities intensifies, allowing premium pricing and sustained margins. Every NVIDIA H100 chip, the gold standard for AI training, is manufactured exclusively by TSMC. When demand for these chips skyrocketed, TSMC expanded capacity and raised prices, capturing value from both ends of the supply chain. Without designing a single chip, TSMC doesn't need to predict which AI chip will dominate. They manufacture them all, making them the ultimate diversified play on semiconductor growth. The sixth stock represents where the rubber meets the road in AI adoption. C3. AI represents the specialized application layer, where artificial intelligence translates from abstract technology into concrete solutions solving specific industry problems. This focus matters because general AI tools require extensive customization before delivering business value. A manufacturing plant doesn't need a chatbot. It needs predictive maintenance systems that prevent million-dollar equipment failures. C3. AI builds pre-configured applications designed for these exact scenarios, dramatically reducing in time from years to months. Their industry-specific expertise in manufacturing, energy, financial services, and defense means solutions arrive understanding regulatory requirements, data structures, and operational workflows unique to each sector. Strategic partnerships with Microsoft Azure AWS and Google Cloud provide distribution channels reaching thousands of enterprises simultaneously. As companies exhaust easy AI wins and tackle complex operational challenges, demand for specialized solutions intensifies. C3. AI's subscription-based model creates predictable recurring revenue that compounds as customers expand AI deployments across additional facilities and use cases. An oil and gas company using C3, AI's predictive maintenance application reduced unplanned equipment downtime by 30%, saving millions annually, a tangible ROI that justifies expanding AI investment across their entire operation. While platform providers offer AI capabilities, C3, AI delivers ready-to-deploy solutions that generate immediate returns, accelerating enterprise from experimentation to transformation. Now, here's the most important part: How to actually invest in these opportunities. Strategic portfolio construction across the AI value chain provides balanced exposure to this transformative opportunity while managing risk through diversification. This approach matters because no single company controls the entire AI ecosystem, and predicting specific winners remains challenging. By investing across infrastructure with NVIDIA IA and TSMC, platforms with Microsoft and Amazon, and applications with Palantir and C3 AI, you capture value regardless of which layer generates the highest returns. The risk-reward spectrum varies significantly. Microsoft and Amazon offer established cash flows and dividend potential with moderate AI upside, while C3 AI and Palantir present higher volatility but potentially exponential growth as they scale. The critical timing element for 2026 is that AI is exiting the experimentation phase, where companies spent without measurable returns. We're entering the monetization phase, where CFOs demand proven ROI, separating companies with genuine AI revenue from those merely discussing AI strategies. Early positioning before this distinction becomes obvious to mainstream investors offers substantial advantage. An investor allocating 60% to stable giants like Microsoft, NVIDIA, and Amazon, and 40% to growth plays like Palantir and C3. AI captures steady returns while maintaining exposure to potential breakout performances, balancing security with upside. Diversification across the AI value chain isn't playing it safe, it's playing it smart, ensuring you profit from the revolution however it unfolds. We've journeyed through the AI investment landscape, from the chips powering intelligence to the clouds delivering it, from secure enterprise solutions to specialized applications transforming industries. These 7 stocks aren't just investment opportunities, they're your entry points into the most significant wealth creation event of this decade. The AI revolution is happening now, not tomorrow. While others wait for certainty, informed investors recognize that certainty comes at a premium. You now understand the infrastructure, the platforms, the applications, and the strategy. The knowledge is yours. What matters now is action. History rewards those who see transformations early and position accordingly. The companies building AI's foundation are known. The opportunity is clear. The only question remaining is, will you be among those who acted, or those who watch your move?